Since 1972, the McIlvaney Financial Group has been a conservative, contrarian investment firm. With that mindset, they have created a multifaceted approach to portfolio management, offering a wide array of services including wealth management, a unique short fund, hedging through precious metals, and excellent educational resources. We have had David McIlvaney on our show multiple times because we respect his outlook, viewpoints, and recommendations. You really need to let them give you a much better understanding of what true portfolio diversification is. Just go to McIlvaney.com/Main Street, with Main Street all spelled out, to get introduced and to garner free information. Again, that's McIlvaney.com/Main Street to schedule your free 20-minute consulting session. Hi everyone, this is Jason Barrick of Wall Street for Main Street and managing editor of The News Doctors and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 35. Now, Eric, we have gold and silver. They're starting to bounce off the bottom. You said last week was the bottom in gold and silver. We have gold at $12.54 and 50 cents and silver at $16.83. On Kitco, do you think gold and silver are close to breaking their long-term downtrend line?
Well, not silver, but gold is looking interesting. And I think literally today, as we record on Friday, May 19th, after the market close, the 50-day is sitting exactly at the 200-day, and we now have seen that bottom off of mid last week, and people moving back in. And simultaneous to this, we've had, in addition to the Trump administration desiring a lower dollar so as to boost the economy, and the statements that Trump himself and other policymakers in the cabinet have said over the course of the last couple of months, going back all the way to that Wall Street Journal article, that they desire to have a lower dollar. We now have even the dollar coming under pressure because of global perspectives of people around the world, investors and financial institutions scratching their head wondering, gee, are we actually going to see an impeachment process in the United States? And the federal government coming into total chaos with the kind of partisan fighting and backbiting that we see now that, frankly, is probably the worst I've ever seen in my entire life of following politics. So, the dollar's fallen over. Today, the dollar rolled over, again, my fresh quote in front of me, it went down, almost 70 cents on the dollar index. I mean, we closed down at 97.14 on the U.S. dollar DXY index. And there's no stopping to this. I mean, the confidence in the U.S. is declining, and we have an economic situation where it's now visible that many economic indicators in the United States are rolling over, and we got credit stresses in the economy. When I know you want to talk a bit about the shale patch and what's going on in oil and all that, but last month the IMF even published a report about how there's a huge percentage of corporate debt in the United States, and to the tune of like $8 trillion that's been originated since only 2008, and a good chunk of that has been put into malinvestment, and so this whole economy's recovery has been fictitious all along. It's the product of just way too much friggin' credit, and this whole boom bust cycle since, in particular, the Greenspan Fed policy orientation of how you fix broken bubbles by blowing new bubbles. I mean, this whole cycle is just kind of crazy, and here we are. The dollar is now beginning a longer term, in the very least, cyclical downturn, and I think we're going to see that continue on with this crisis in confidence in the United States government.
It's just incredibly frustrating, Eric, to see gold and silver, struggle to stay above support levels where you have Bitcoin. It's only $100 away from doubling its price in 2017. Bitcoin briefly, today is Friday, May 19th. It briefly touched $2,000 and went over it today. It's as of right now, it's $1,938.28. Ethereum today alone, Eric, is up 26% to $122.66. I sold out of my Ethereum speculation. I had it for a little under a year. I bought coins, my position between $9 and $13 a coin. I sold all 21 and change of my coins out at 87 a coin. So, I missed out on some of the move higher, but, these things are going parabolic. This is what a lot of people in the gold and silver community expected gold and silver to do at some point. But my response to that would be, well, Bitcoin is not manipulated like gold and silver. There's no, derivatives and futures contracts on Bitcoin yet, although it looks like the CME Group has filed patents to put a Bitcoin futures market into effect in the near future. So I would be very careful then about putting all of your money into Bitcoin. Obviously, you should own some cash in case there's a market crash, some physical gold and silver, and some Bitcoin. But going all in on any one thing, yes, you can make a lot of money in the short term, but it's extremely dangerous because then the politicians or the central banks could, or the Chicago Mercantile Exchange could change the rules on you and screw you over.
Yeah.
But I want to bring up some other points about the gold and silver market and why I think we are in a bottom soon. And yes, I have been extremely frustrated about it, but these are signs that a bottom is going to come and we can't go much lower. So first of all, for the silver miners, Eric, some of the higher cost silver miners like Coeur d'Alene and Hecla, at the current silver price, which is below 17 now, they aren't even making $1 an ounce. Okay, that is a razor thin margin. Yes, they have cleaned up their balance sheets in the last couple years. Yes, they have maybe sold off some assets to fix their balance sheets. Yes, they have cut some costs quite a bit over the years, but these are not the lowest cost operators like a Pan American Silver or a Fresnillo or a First Majestic Silver. I should probably have Keith Neumeyer on again in the near future to talk if the gold and silver miners can cut costs that much more. From what I've heard, Eric, I don't think there's that many more costs to cut at the mines. So for the people who are screaming that, silver is going to collapse further, there's really no more cost to cut because the miners have been in full cost-cutting mode now for 6 years.
Yeah, and supply has also declined. And even though, and on top of that too, you have the contraction that'll be coming in the base metals sector for byproduct, where silver is some 65 to 70% byproduct produced on an annual basis out of base metal and gold mining operations. And there's so much excess capacity in copper and then base metal overall that we've seen a pretty significant decline off of the highs or higher prices that we saw earlier this year that were a product of the big credit impulse that China put into their economy back in 2016, combined with that whole reflation hopium trade with Trump being elected and everyone talking about infrastructure spends and to the tune of trillions and global participation in that as well too. All of that kind of big picture thesis is evaporating before our eyes, and that definitely is going to put some pressure on base metal producers, which in turn will inadvertently, limit the amount of silver coming to the market.
And to add to your point there about silver supply and how there's going to be a supply crunch in the near future, the Silver Institute just put out a report this week. And for the first time in 14 years, annual global silver production has fallen. I think it's down 14%, and it hasn't fallen since 2002. So what this tells me is that the primary silver miners and the base metal miners, like you said, who have silver as a byproduct, they're not interested in bringing on new mines because there's not a lot of low-cost mines left. I mean, other than we were discussing this before we started recording, other than Mag Silver's massive new silver mine that Fresnillo is their JV partner, Fresnillo is carrying the mine and helping build it out, and there's good infrastructure near the mine in Mexico, and it's very high grade. Almost all the new potential silver mines in the next few years, they're not economic at current prices. They're not economic even at $20 an ounce silver. They're going to need $25, $30 an ounce silver to raise the capital and the mining companies have to be confident that the silver price is going to stay at $25 to $30 an ounce silver before the mining company risks, basically the entire company in some cases gambling that they can bring the mine online and make a profit.
Yeah.
Yeah, so this is not sustainable where we have a large global demand for physical silver and where we have supply contracting. So the price is going to sort out the supply demand problems, and I think in the next I would be surprised if it takes more than 2 or 3 years, but we're definitely going to have $25 an ounce silver, and it's just going to be on the fact that we're replacing reserves. So it's not going
Yeah,
to get...
And to help our listeners understand why this is really important when it comes to the manipulation and the fact that, silver has been, the price of silver has been governed by the price discovery mechanism and COMEX and the LBMA for the most part, which is all a bunch of paper pushing nonsense. And the way the bullion banks have been able to keep silver down is by issuing tons and tons of new contracts as organic longs come in seeking to get paper exposure, and these larger financial institutions and big traders and all that, they only care about paper profits. They're not like stackers. They don't think strategically. They want price exposure, so they go and be lazy, and they go and they buy stuff on paper, on exposure in the futures markets. And that is going to become far more difficult for the bullion banks to execute as physical supply is constrained, and industrial purchasers in particular, but even investment demand is going to put a floor on the ability of the cartel to manipulate. And what will result is we'll have a managed retreat process, and Bill Murphy's been talking about this for over a decade.
Yes.
Is basically a scenario where the cartel will have to back off a bit and let prices rise simply to prevent the breaking of their manipulation tools. I mean, COMEX is a very powerful tool in the hands of the bullion banks to control the price of gold and silver. And physical supply does limit the ability of the manipulators to have total reign. I mean, not that long ago, I think it was Bix Weir was making the argument a week and a half ago or whatever, that silver could go to zero or gold could go to zero if the Federal Reserve so wished, and that's not possible.
He also, Bix Weir is crazy. He also said that Donald Trump was working with Bernie Sanders, and he also said he's going to work for JP Morgan now. So I've never listened to a Bix Weir interview. I did listen to his documentary about the Road to Ruta with the children's book, which is ridiculous. That everything's playing out with that conspiracy theory to intentionally. Yeah. To get us back.
He built a newsletter operation on a comic book out of the Boston Fed. Go figure.
Well, I have a couple more things I want to talk about the gold and silver industry before we transition. So there was a good Sandstorm Gold conference call a week or two ago, and it basically talked about the quality of deals in the industry. There's a lot of new players that have come into royalty and streaming who don't have expertise in the industry doing those deals, from private equity and pension funds, and basically they're doing large capital deals for 5% return or less. In some cases now, the Sandstorm Gold, Nolan Watson of Sandstorm Gold disclosed that they're bidding against people who are willing to make 1% or 0 or negative return on a deal. So this is just unbelievably mind-bogglingly stupid that people are doing these deals, but those deals could blow up. They're not going to be good deals then. Risking $100 million or $200 million for such a low return with counterparty risk is not a good thing. But I wanted to bring up the Jim Sinclair quote because I think this is important, because I've been getting text messages and other calls from people on social media telling me that they know silver is still cheap, but they don't want to go buy anymore. They want to go chase, Bitcoin or Ethereum. Well, you should have bought Bitcoin or Ethereum last year when it was cheaper. When we were telling you it was contrarian and a lot of people didn't want it back then, or they're saying, oh, it hadn't risen in a while, things like that. You got to be contrarian about things. You don't want to be chasing things higher, especially in Bitcoin trading where there's not sophisticated trading tools on the exchanges. It's not as easy to hedge your position or stop out or things like that. It was, when I was trading on Coinbase, it was very simplistic trading software with Bitcoin. So my point, though, was the Jim Sinclair quote. I don't like, obviously, Jim Sinclair's price targets. He made some ridiculous ones, like King World News dumb ones, I think he called in 2010 or 11 for 5,000 gold. But he does know a lot about the gold market, Eric, and what he said, because he knows the people who are actually doing the manipulation in the gold and silver markets, he said that the retail investor won't make any money off of precious metals going higher because of all the volatility up and down in the price and the manipulation. He said they'll quit. He said that the prices will be manipulated down, the retail investor will give up, either stop buying or sell all their position and bitch and complain, and then the hedge funds, the more sophisticated wealth managers who have extra capital, who are making a big salary, will see it's cheap, because they have extra money, they have more money coming in and a good job and stuff, they can be more patient and afford to wait this out and wait the manipulators out.
Yeah, and historically, if you look at the big run in the late 70s through 80, most of the people who were trying to get exposed to gold gave up, and they did miss that move. And
yes.
This is common in blow-off tops. I mean, we usually see 60 to 80% of any given market's move in the last 6 months of a market's bull market run.
Yes.
You can look at the NASDAQ and see how that had, by late mid 1999 through March of 2000. I mean, the NASDAQ went berserk. We're going to see the same kind of thing when people rush into the precious metals space for wanting of safe haven protection, and it'll come in a big burst that'll get ahead of the manipulators, the policy managers who are trying to preserve the system. We see little anecdotal examples of that. Post the Brexit vote, gold shoots up, takes them about 2 weeks to calm markets down. The global pool of capital is bigger than central banks, and it takes time for the central bankers to do what they do. And when the entire confidence paradigm begins to shake at the knees, we will see really, really big, fast moves in precious metals. But long before then, we'll see the managed retreat process where, because of the diminishment of physical supply availability, combined with the ever-increasing vacuuming of physical out of vaults in London and Western vaults in general, flowing eastward, that's already created a floor. We're no longer at $13 handle silver.
Yeah.
And the reason why is because of the limited amount of physical.
And
the manipulators don't have total control.
Yeah, they don't have total control. They can't take it down to zero like Bixware is claiming. That would, because so much silver is used for industrial demand, and there's still a lot of investment demand for silver all over the globe. But, the new price targets in the next couple years, the new manipulation levels that they're going to have to defend are going to be $1,400 to $1,500 gold. And that's what a lot of the new gold mines are going to need to be built. And for silver, it's going to be 25 to 30. So you're going to be looking.
Yeah. In gold, they're going to have to defend those prices in under a year. In silver, under 18 months.
Well, yeah, I don't know the exact timing on that, but I would say conservative estimates would be 2 or 3 years maximum, because I don't think the miners can survive that much longer. They can probably survive a little bit longer at current prices. They can raise a little bit of capital, but I think I'd like to interview Keith Neumeyer again about this and ask him if there's any more ways he can cut costs an extra couple dollars an ounce to drop costs, but I don't think they really can for the most part, because I think the miners, all the costs that were easy to cut, they've been cutting for years now. They've been, spending a lot of money hiring consultants, looking for new ideas and new ways to cut costs since the bear market of gold and silver started, the artificial bear market started in 2011. So when you've been in a bear market for that long and cutting costs, you can't cut costs for forever. That's not how mines work.
I think he's actually made the argument that the vast majority of all available cost cutting is in the rearview mirror, and that is, in fact, part of his thesis as to why he believes that silver is going to start shooting higher.
Yeah, I think it's a valid thesis. I think it's a valid thesis. A lot of commodities, Eric, trade around their cost of production for a while. You have a case like now in the uranium market where uranium is trading for way below production, but that's because there's a lot of stockpiled surplus above ground. But eventually you're going to have a higher uranium price too. So, I mean, commodities, whether they're oil or metals or foodstuffs, they cannot trade below production cost for that long. Now, you have to figure out what production cost is, because in a lot of cases you could have people lying. And we're going to talk later in the show about the oil companies. There's people in the Bakken claiming that they can produce oil profitably for $21 an ounce. I don't believe it. I think that's just their lifting costs. It's not counting transportation, replacing reserves on exploration, SG&A costs, all the other costs you need to run a business. So I don't think Bakken oil, which is higher cost oil, it's not the good light sweet crude. Refiners actually sell, they buy the oil from the oil producers in the Bakken for below WTI prices. So it's not a high quality crude that fetches a higher premium price. It actually fetches a lower price. So, but we'll talk about that later in the interview. I want to transition now to China, Eric. You were telling me about this private wealth management collapse that is going on in China. You said $3 trillion was lost in a very short amount of time.
Yeah, well, the whole market hasn't collapsed, but there was a problem back in April with one of the largest private banks, and the really large banks in China are quasi-state-owned entities. But this private bank had about 3 trillion yuan worth of this wealth management products that they have sold to their customers. And it was a largely fraudulent operation. The bank employees were like buying artifacts and gold and, squandering the money and doing all kinds of weird stuff with it. And this whole wealth management products market has turned into the giant market. I mean, by the end of last year, it had grown to 30 trillion yuan in size. And, we're talking 4.5 trillion US dollars worth of assets that are in this market, and it's part of the shadow banking system in China. And the authorities there have been trying to figure out how to get their hands around it, regulate it, control it, stop the corruption, stop how it spills over into the challenges that China has with respect to capital flight, and how a lot of funds within the credit system bleed out of China and into worldwide markets, creating real estate bubbles and all kinds of things. They have a really big mess on their hands, and I think that part of what has happened in China in the last 2 months are the policymakers first continuing on with their curtailment of credit that they had been dumping into their own market back in 2016. And if you look at the worldwide credit impulse of credit coming from major central banks around the world last year, China was the Godzilla of all the central bankers out there, putting in a ton of credit into the system, and they started pulling that in back in November. And now all of a sudden they're looking around realizing that they've got a problem on their hands. The Shanghai Stock Exchange was, for a period of time in the last couple of months, rolling over. They've got the struggle with dealing with their credit system, possibly spinning out of control when it comes to a real estate crash. And all the excess capacity they have in real estate is an ongoing problem. So just within the last late last week, Chinese authorities signaled that they are considering not reeling in the credit as much as they have, and not going after the regulation of these wealth management products as aggressively as they have intimated before. They have a real big problem on their hands. This stuff spills over into the commodities market as well, too, because a lot of these wealth management products are associated with derivatives that are tied to even collateral that's based on copper warehouse receipts within the Chinese economy. And so, we've seen a rollover in iron ore prices that has been pretty significant, and a very significant contraction in Chinese commodities activity that is linked up to this shadow banking system. And when China was cracking down on credit as well as cracking down on the shadow banking system, the timing of that corresponds with the mid-April downturn that we saw in precious metals. And they're linked. This is a story that really hasn't been fleshed out much in the alternative asset community, and it definitely needs to be unearthed a little bit more, and we'll talk about it in our next show when I've had more chance to dig into it more. But the main point that's most relevant to commodity sector investors today is that China's cooling their jets when it comes to reining in their credit. They realize that they're stuck, and they have the 5-year planning session, the plenary coming, and change in leadership later this year, and the whole establishment there is recognizing that they have to be pretty careful when it comes to this juggling act after having created a gigantic bubble. China's credit has been huge, and the amount of monies that they've put into the global system, and as a result has had impacts across the world.
Exactly, and China has, for perspective's sake, China has put 28 trillion of RMB in money and credit created out of thin air into their economy, and it's gone all over the place, creating real estate bubbles where you have people leaving China to buy all cash, sight unseen properties in Australia, Canada, London, the United States. So, that's fueled a lot of misallocation of capital and asset bubbles and credit bubbles elsewhere. So compared to the Federal Reserve, which has expanded its balance sheet from around $800 billion to over $4 trillion, since the 2008 financial crisis, China has actually, I think, expanded its balance sheet even more than the Federal Reserve has when you convert it to US dollars, but that's not counting currency swaps. So when you count the currency swaps, though, the Federal Reserve has done even more. Although before the interview, Eric, when we were talking, you said, some of that currency swap money has come out of the system. But the thing is, they can move the money back in pretty quickly if there's a derivatives fire or there's a European bank like Deutsche Bank about to blow up and things like that.
Yeah, and to give further perspective on just how much credit we're talking about, if you take the global GDP equivalent of economic production for the entire globe last year, 2016, China's contribution in terms of the credit that they created relative to the output of the entire planet nearly represented 4% of the output of the entire planet. They were like, I'm doing this strictly on the USB estimates and some graphic representations, but they were about 80-some-odd% of the global liquidity that was created in 2016, just China. And we have noticed as well this rotation pattern where, the Federal Reserve was the first to act after the 2009 period, and it came out with QE1, QE2, and 2011 is basically when the Fed peaked out in their cycle, and their program was up and running, and then they stopped doing 85 billion monthly purchases in mortgage-backed securities and treasuries, and picking up the slack was the ECB and the Bank of Japan, and we've seen this rotation, and then China picked up the slack in 2016, and here we are. Who's going to pick up the slack next? No central bank. The central bank's balance sheets are saturated, and all they want to do is talk about how they're going to do, quantitative reversal.
Well, there's stealth bailouts in China, Eric, because from what I've heard is there's a lot of loans in default in China, but the banks have been told not to call in the loans. So to raise capital, they're raising capital for insolvent companies. They can't pay to improve their balance sheet and hopefully try to restart the companies so they can get things going again, but they're not calling in the loans. These are the one thing I'm confident in, Eric. Well, actually, there's a few things. So, there's going to be a lot of bailouts. There's going to be different types of bailouts, not necessarily just printing more money in credit, but rules changes for bankruptcies, to prevent bankruptcies or delay bankruptcies, or, technically this is not a government bond default, or like in Italy, where I think the commercial paper market in the Italian bond market, where people who were in 90-day commercial paper, Eric, I think they were forced into 10-year Italian government bonds. So there's going to be rules changes and things like that. In addition, so there's going to be weird types of new bailouts and rules changes. There's going to be currency devaluations from a lot of countries, because when you have a debt problem, Eric, one of the ways to deal with the debt problem, rather than writing off all the debt at once, is to devalue the currency, because then you can pay back the debt in cheaper terms. So there's going to be probably global currency devaluations, and this Mark Faber, who I've had on in the past, has talked about, the merry-go-round and coordination of currency devaluations. And Michael Maloney calls it what the race to debase of goldsilver.com. We're going to, whatever you want to call it, it's going to be global currency devaluations. And then the other thing is going to be corruption and fraud. I mean, it's just pervasive throughout so many different countries. Corruption and fraud, the levels of it. And, most Americans don't want to admit this. I've tried bringing it up to some people who aren't woke, but they don't want to admit how corrupt their government is, and fraud is pervasive at so many different levels, whether it's James Comey, so many different creatures from the swamp are, literally getting away with felony after felony after felony. And it's not just the United States.
Yeah.
Yeah, so that brings us now to let's talk about the Comey firing. So do you think the Comey firing is a good first step towards fighting the swamp to restore rule of law?
Well, I don't know if I'd want to hook up to the whole concept of Trump's meme about fighting the swamp, because he's definitely suspect in damaged goods. But it certainly is productive to see that apparatchik removed, because he's been, part of he's basically a corrupt administrator and has had a checkered history. So him being gone and now the picture is a productive thing. But we have a major factional war going on with the deep state trying to basically paint Trump as somebody who is a national security threat, and they're trying to impeach him. And Trump is finally doing things to push back against that, and it's actually a little surprising that it has taken him this long to go after Comey and fire him.
Well, Eric, I don't think Trump realized how corrupt the system is. He knew he was in for a lot of work when he got here, and he wasn't afraid of that. I've heard he works 18-hour days here. But I don't think he realized that the bureaucracy, all these never Trumpers, hardcore Democrats working in government agencies would literally come up with new ways to leak and sabotage Trump. So basically, he can't get a lot of his own people in here. He can't even get his own political appointees approved. That he can't get security clearance for them because that's being blocked. And basically, it's gone to the point now where Trump is wasting a lot of time and energy just to get little things done. So yeah. It's Catherine Austin Fitts. I don't know if you saw this interview on InfoWars, but she was on there a week or two ago, and she was telling Alex Jones how Donald Trump is being carrot and stick to death, with all the games that the deep state and the other people, like the bureaucrats, are playing with him. It's giving him, migraines and frustration and headaches because, if it was a private sector, if it was one of his companies, if he wanted to make wide changes, he could fire a bunch of people really quickly. He could start allocating capital into a bunch of different things, and within a couple years, he could get things fixed. You cannot do that, unfortunately, in the government. And it's very difficult to go out and fire tons and tons of government employees because, now there's government employee unions and blocking stuff. So he cannot go out and, start firing thousands and thousands of government employees en masse like he potentially could at a private sector company.
Yeah.
And also, Eric, the federal government budget, what a lot of people aren't aware of, a lot of the federal government budget, I think 80% of it is already locked in for the next 5 years. So a lot of the government growth is already locked in. It's very difficult to slow down the growth of government. A lot of those things are already locked in. So, he could stop the government and he could try to renegotiate. He's talked about doing that. But, look at all the games that the Democrats can play. You brought up how they're trying. It seems to me, Eric, that, every day the mainstream media is trying to impeach Trump even more.
Yeah, well, and then Trump's response to it is always one of trying to find some middle ground, and we can use the Comey example because his leading candidate is apparently Lieberman, who is supposedly, an independent, but the reality is that Lieberman is a total Democratic hack. He's tried to massage his image, and now he's no longer in the Senate, but this is the person that he proposes to replace Comey. Trump is a street fighter in the corporate world, but he's totally over his head when it comes to how to deal with the realm of Washington politics. And he's got advisors that give him crappy advice. Witness what happened with this whole Syria thing and the launch of 59 Tomahawk missiles. We talked about that in the previous show. He's over his head. And he's being played like a fiddle by all of his inner advisors and people leaking around, even in his own team. And then he's got Pence, the vice president, who basically is an enemy to Trump, and he brought him in simply because he wanted to have an olive branch extended to the other side of the fence when it came to the Republican establishment on the campaign trail. That's why he picked Pence. And all of these kind of haphazard, halfway measures are counter to the public image of Trump as, decisive, entrepreneurial, he's not how he was representing himself on the campaign trail. So a lot of his base is pretty upset.
Well, the president, what most people don't know, and they thought Trump could come in here and make a lot of changes, is the president just doesn't have that much control over things anymore.
Yeah.
The bureaucracy, and we saw this with Ronald Reagan, the bureaucracy just doesn't have to listen to the policies that the president implements. They could just ignore him, sabotage him, leak. So the bureaucracy, the lobbyists, a lot of those guys are the ones who run Washington, D.C. So, they have a certain agenda, and their agenda is they want Trump gone. I think they'd rather deal with Pence because Pence is a normal neocon. And so Pence would be easier to control and easier to more of a status quo guy. So I wouldn't be surprised. They're coming up with like anything that they can get their hand. They're trying to turn Trump into basically like a Richard Nixon type of impeachment.
Mm-hmm.
And it's going to be a fight for Trump every day. Every day is going to be difficult. And he's made some really poor decisions, bringing on people like Reince Priebus and so many others that I've even heard, Eric, that on days that Rex Tillerson isn't in the State Department, that Condoleezza Rice is in there doing meetings and a bunch of the staffers in the State Department are never Trumpers. They're hardcore Democrats who were loyal to Obama and Hillary Clinton.
Mm-hmm.
So and he can't go fire all these people. So it's just a mess. It's a lot larger than Trump thought, and he admitted that things are a lot more difficult. It's going to be very difficult for him to get a lot of things. A lot of his domestic policies, Eric, are being intentionally blocked.
Yeah, and
so
we have a scenario unfolding in the next 6 months of just craziness. We have a tax policy that is completely haphazard, and there's no way he's going to get all of his goals through. We have the Obamacare debate. We have the budget ceiling debate pushed back until this fall. We have Federal Reserve raising interest rates that creates even more of a burden from the financing of our annual budget deficit point of view, and the markets presumably pricing up, yields moving further up. We have the ongoing impeachment and machinations, and the decline overall in the confidence of the ship of state of the United States government was expressed very clearly yesterday, when the markets burped because of fear of impeachment, and the dollar rolling over as well too. This is an expression of worldwide diminishing confidence in the ship of state of the United States. This is all very positive for precious metals.
Yeah, and if it had been another candidate, I think they would be in bad position as well. The mess that Trump has inherited is just so enormous. We've used this analogy in the past that the ship is so large it's difficult to turn it around.
Yeah.
And when you have a debt problem as large as the United States, you can't, and it's already this big, you can't go and do a bunch of changes. And the people in power that are making a lot of money off the status quo, Eric, the military-industrial complex, the bureaucrats here in D.C., a lot of them, most people don't realize this, Eric, but a lot of government bureaucrats are making twice the salary of an entry-level private sector job. Mm-hmm. So they have Cadillac health plans. They're making double the salary of a private sector job for just having 2 degrees or 3 degrees, and they can't be fired. So it's a mess around here, and DC is a huge parasite that has grown and grown and grown, and it's affected a lot of the real economy in the United States, other than the large corporations who are also involved in the cartels and the fascism and stuff like that. So it's going to get worse before it gets better. Trump has made a few good things though, like I think firing Comey was a good first step. Putting in a constitutional judge like Gorsuch was a good first step. But the mainstream media, Eric, they're not playing around. There's a lot of people here in DC. I was out at dinner last month, and there's government employees at a restaurant in DC, and they don't care if anyone hears them. These guys are just laughing about how they can sabotage Trump and hurt him at their government jobs. So, and I'm sure this is all over social media. It's labeled the resistance now. Even though, they've been running Washington for a very, very long time, they've done a marketing gimmick and relabeled themselves the resistance now that Trump has won. And, they're talking about mutiny and how to sabotage and leak. And, Eric, if you're leaking top secret information, that was a, felony. You're committing treason, basically. And there's people in the White House staff who are, government employees, like low-level bureaucrat White House staffers, who are willing to do this. And, under Comey, they weren't going to go to jail for it.
Yeah.
So we need to establish the rule of law where if you break a law, it doesn't matter if you're Hillary Clinton, it doesn't matter if you're James Comey, doesn't matter if you're a rich Republican, doesn't matter how much money or whatever political connections you have. If you broke a law, you should go to fucking prison for it if it's a clear felony. So we need to, if we're going to take the country back and rebuild the country into something respectable again, we're going to have clear rule of law. So, unless Trump puts in a really credible, got high integrity, I don't care if the guy's Republican or Democrat, but he can't have a control file like Comey, he can't have a checkered past, and he's got to be able to respect and enforce the laws we have. He can't selectively, he can't be a criminal like the past attorney generals were, Eric Holder and Loretta Lynch. It's just really unbelievable what criminal Obama was able to get away with. And yes, other administrations were bad, but Eric, it really seems to me that the 8 years Obama had, that the amount of crimes, whether it was, corporate fines, billions of dollars that was funneled to George Soros, pick charities, and so many other things, it seems like the amount of crimes and the level of morality really collapsed.
Yeah, and this isn't a partisan trend. It's something that just happens with the nature of empires over decades, over centuries. And it's happened to every empire in world history, where you get huge corruption towards the tail end of the apex of an empire's rise, where the malinvestments and corruption go berserk. And every single president we've seen since, easily one can make the argument from Reagan onward, has seen a further financialization of darn near everything in our economy. And back before Reagan, or in the 50s, the financial sector, in terms of its size relative to everything else in the Standard & Poor's 500 index, or percentage of the gross domestic product in the United States, was, the latter being somewhere around 10%. And on the peak of bubbles, it balloons over 30%. And the enabling of bigger government ever more every year is a product of that, and going off of the fiat, or going off of the gold standard on a global basis in 71, when Nixon closed the gold window, is a chapter in this overall story that's evolved over multiple decades. We have, seen huge corruption and huge government and huge malinvestment and huge excessive leverage, creating boom-bust cycles that blow up everything. This is a process of a long-term historical arc of history that happens with empires, and it's not a partisan thing per se. I mean, look at the Democrats used to paint themselves as progressives and whatnot, and some of the biggest hyenas when it comes to geopolitics, certainly, but corruption as well, has been the Clintons. I mean, the very idea that Hillary Clinton can paint herself as a progressive is outright laughable.
Yeah, I mean, look how much money she took from Saudi Arabia, and even at her own Clinton Foundation, she was paying her women employees less than men. So enormous hypocrite, enormous hypocrite. Look at all the money that they stole from Haiti.
Yeah. Over 90% of all the funds they raised to help the earthquake victims went in their own pocket.
Yeah, and Obama was a criminal and a hypocrite. Loretta Lynch, Eric Holder, enormous hypocrites, enormous criminals, probably large control files on them too. And, James Comey never should have gotten, if we were a moral society that did not value corruption, James Comey, Eric, should have never gotten the FBI director job. He was not qualified for it, given his checkered background with the HSBC, that he got them off criminal money laundering charges for billions of dollars in drug cartel money, that he was brought in as a fixer in exchange for a seat on the board of directors for 3 years and other stuff. He was a military industrial complex lawyer too, $6 million a year salaries last year there. He never should have gotten the FBI director job. I mean, he didn't have any experience working at the FBI. So, you know, these people are getting, it's really gone to, you know, Atlas Shrugged. It's gone to Atlas Shrugged levels of corruption where, you know, if you haven't read Atlas Shrugged, it's a really long book, but go look up Wesley Mouch. He's one of the best characters ever created in a fictional novel. Just a great, great bad guy.
Yeah, I don't know, dude. I think you're being too hard on Comey. His resume is perfect for the FBI. He's a foot soldier for the system.
I'm saying in a better. Well, I'm saying in a better society. He was perfect. Comey was perfect for what Obama wanted to do. Yeah. Obama wanted someone he could control, another criminal that would let him get away with larger and larger crimes, right? That was the argument I've heard from people, that, you know, Obama selected him because he knew he was controllable and that he would let Obama get away with crimes and all this stuff. I mean, look at all the evidence that Comey buried in the Clinton case. You know, there was a ton of, he basically, with that speech before the election, he basically said Hillary Clinton committed all those crimes with the private email server, but then he said there was no intent. Well, the U.S. Espionage Act, Eric, you don't need intent. You just need gross negligence of top secret data and classified data. If you're grossly negligent with that information, intent doesn't matter. You violated the Espionage Act. Which
yeah, and like we talked about last year, when Hillary revealed or compromised the special access projects, you know, that's an order of magnitude even higher classification than top secret. And she put out like 21 or so of those things on her private server that compromised sources and methods and quite possibly may have had some agents even killed.
Yeah, it's incredibly frustrating. I mean, we could go on and on about all the wrong things. The French election, Macron winning. Macron has, we have a couple more news stories before we get to the end and the scumbag nominee, so I'll run through them pretty quick. French election, Macron. You know, what's ridiculous to me, Eric, is the French press, right? They intentionally did not cover the tax leaks that the hackers got because the French government asked them not to. So we're getting into a crazy world now where a lot of the mainstream media, whether it's in the United States or France, they're almost basically doing the government's bidding. It's really sad that, you know, or they're picking a side on a political side because Macron was, you know, more of a mainstream candidate. And then on top of that, did you hear that they're suing Jack Posobiec, who's an American journalist now, and all he did was just retweet on his Twitter an article that a WikiLeaks link that had to the hacked emails with Macron's offshore tax dodging.
Yeah.
And now they're suing this guy. It's really ridiculous. It's Orwellian.
Orwellian and scary, and we're going to see a lot more of that kind of stuff on a going forward basis.
Yeah, so I guess maybe I should be more careful on my Twitter, but I have had to block a couple dozen hardcore, you know, maybe they were paid by David Brock and Media Matters, hardcore Democrat trolls who were, you know, adamant telling me Donald Trump is a Russian spy and I'm a moron for not understanding this.
Yeah, and half of those are even computer-generated bots that they put out with AI to, you know, pollute the social media.
And then we have the mainstream media here in the United States, Eric. I mean, the Seth Rich stuff, the evidence that has come out the last week or so, the mainstream media is totally going over it. They just keep talking about Trump-Russia. Trump-Russia, you know, whatever's Trump-Russia. And then today was the Anthony Weiner. He pleaded guilty to the pedophile stuff. And I don't think their mainstream media is covering that either.
Well, we should be a little more specific. He pleaded guilty to sexting a minor. And not, you know, people might think, you know, there's a hookup to something even more significant. So there's still that open question about how pedophilia is within the midst as well. I mean, the whole Pizzagate stuff was put under the rug and classified strictly as a conspiracy theory. So much so that even people are afraid to even talk about it. Talk about, you know, Twitter and social media censorship in general. I mean, people are scared to death about having any kind of discussion about those kind of subjects because the backlash of Twitter and Facebook and whatnot censoring and removing ad revenues and so forth, demonetizing videos and so forth is a very powerful bulwark against, you know, free speech. It's pretty disturbing what's going on.
Well, don't get me started on YouTube censorship. I interviewed Ron Paul last week, and I only got 20 new subscribers on my YouTube channel. I'm still not over 15,000 subscribers on my YouTube channel. The only explanation for that is censorship. I interview a great guest like Ron Paul, and it hardly gets me any new subscribers.
Yeah, well, they're actually open about how they deal with their algorithms that serve up what content will be presented to the broader audience on the entire platform of YouTube. And Wall Street for Main Street has been blackballed.
Yep, I agree. They have been blackballed. So I mean, that's why I'm looking for new ways to move the content. We're going to be probably upgrading the website in the next few months, and we may be moving more of the content over there or looking for other ways. So two more stories before we get to the scumbag nominees. The oil market. The oil market's very interesting now. We are at, let me pull up oilprice.com. We have WTI crude at $50.36 and Brent crude at $53.66. We've had a little bit of an oil rally. But Eric, if you go to oilprice.com, and these guys are not libertarians, this is an oil industry website like RigZone. This is a oil industry. This is an oil website that caters to people in the oil industry. And there's a writer on there, an article from yesterday by Svetlana Paraskova, and it says U.S. shale just won't die. Bankrupt drillers rise again. And I'll put a link to this article in the info section. It's talking about oil companies coming out of bankruptcy, being able to raise even more money and then increase oil production in the United States even more. And they're listing a lot of oil companies. And, you know, Eric, it's really crazy that the oil price is falling, and yet the rig count continues to go up in the United States. Over $84 billion of capital has recently been raised just in 2017 for U.S. oil companies. You know, this is starting to look like one of the largest ever busts in the oil market is coming, because we have a situation where the global economy is slowing down. Oil supply in the United States is increasing like crazy, making up for any drops in other countries. We have a lot of other countries in OPEC. Even though the oil price is falling, they want to increase production because, you know, it's perverse. It's not a free market. Those national oil companies, when the oil price falls, they need to produce even more oil to make up for lost revenues. So, you know, we could be setting up for a situation like the technology bubble. And the other thing about the technology bubble, Eric, is you were around in Silicon Valley during the technology bubble, writing about it and also working in technology companies and investment analysts there. You know, it seems to me, Eric, these oil companies now in the United States, Wall Street is funding them like revenue-only technology companies, that they can raise almost unlimited amounts of capital even out of bankruptcy. It's really gotten crazy in the oil patch.
Yeah, and this is what you would expect to see at the end of a credit cycle, where the excesses have created so much malinvestment and vulnerable companies, and instead of trying to rein that in, what happens is that it's the last party, the last rounds of drinks go around, and you know, even the IMF last month put out a report spotlighting how in the United States 22% of U.S. corporate assets would be weak or vulnerable if we have credit contractions, and since 2010, we've seen a net addition of $7.8 trillion in debt origination in the United States. The corporate sector's increase of leverage has been enormous, with the Federal Reserve lowering interest rates to just off the floor of zero. Corporations went berserk, and the biggest malinvestment bubble of all is this shale bubble. And you know you're in trouble when the IMF is wondering, hey, what the heck is going on here?
Well, there's over $1 trillion in oil debt. There's a lot of derivatives that are tied to oil, not just the futures market, which is also, you know, there's a lot of manipulation there of oil prices too. Even oilprice.com was running articles in the last month or two about how high-frequency trading algorithms are manipulating the oil market again. So we have a lot of crazy things going on in the oil market. The other thing is, and we brought this up at the very beginning of the interview, is the bailouts are changing. how, remember, my rule number one is politicians, central bankers, bureaucrats, bankers can change the rules of things, and one of those things is the rules of a bailout. So I think we have a situation, Eric, where there's a lot of insolvent oil companies that haven't been brought in for bankruptcy, and they're still raising capital, and they're drilling even more to pay off the debt. And, the banks have been told, maybe by the Dallas Federal Reserve, we had a Zero Hedge report on that, I think last year, right?
Right.
And they said the Zero Hedge said they had a good source on it. And obviously there was a lot of people that were saying you're lying, it's fake news, you're making it up. But, that to me, definition wise, then is a bailout. If you're a Chinese bank and you're not calling in loans of Chinese companies that are insolvent, but you're not printing any more money, that's a different type of bailout. If you're a bank that is loaning out to oil and gas companies and they can't pay off the loans, and you've been told by the central bankers not to call in the loans, that's a different type of bailout too.
Right.
Yeah, so it's like the rules are shifting, the goalposts are shifting, and the rules of the bailout game are constantly changing. There's nothing fair about this. I mean, if you're an oil investor or an oil speculator or you're running an oil company, it's great. It's great for you, because then they got your back. If you need to go raise more money, your banker will call up, no problem. We won't call in the loan. You can still get rich off this bubble. So it's looking, if this continues, Eric, we may have, because the deep water oil companies can't make any money at this oil price, they're probably going to go bust first. But if this continues with the amount of drilling increasing, with the oil price falling, we're setting up to have one of the largest oil busts ever in the next 18 to 24 months.
Yeah.
Because if there's $84 billion in just a couple months rolling in money and credit into the oil market, and that's gonna you extrapolate that number, it's going to be absolutely massive, and that could set up for a big bust at the end.
And on balance, we also have a global economy that's rolling over. We have pockets of strength here and there. Glimmers of hope in Europe, for example. People are looking at Europe and thinking optimistically that Europe is going to be a bright spot, but that thing's not going to happen. And all this is going to end up hitting demand on the oil patch, and that's going to also lead to lower prices and further pressure on this excess credit, with the whole cycle playing out.
Well, the thing is, with a lot on the European stocks, Eric, a lot of European corporations they don't have their factories in Europe. So they've been not German ones, but a lot of other companies. I was listening to presentations on Real Vision TV talking about how the European stock market may be a bargain, but only for companies that don't have their factories in Europe. So,
right.
But Europe itself has tremendous amounts of problems. And that brings us to our scumbag nominees for the week. One of the largest ones is, this story came out a few weeks ago. There are now reports that the unelected European Union bureaucrats in Brussels are going to demand $110 billion for Brexit. And England, the United Kingdom, isn't even fully in the European Union. So $110 billion for Brexit will be a very, very expensive divorce. Any comments on that, Eric, for the price of that divorce?
Yeah. Well, I mean, in the long run, it'll be good for the British citizenry to have their independence. So the divorce is a long time in coming.
Yeah, there's a divorce joke in there. I think I can't remember the exact divorce joke. I'm going to butcher it. So I think the joke goes that you ask someone the cost of the divorce, and the guy responds, "It doesn't matter. It was worth it."
Yeah. Brussels was not a good wife.
Okay, and the last two, we have two more. Pope's comments, the current Pope's comments on libertarians. So he basically went on this rant about how the libertarian movement is growing like crazy, and how it's extremely dangerous in society to have people making decisions for themselves individually and putting themselves first, making, me first decisions rather than decisions that are better collectively for the group. So I don't know. I think this guy's background, this particular Pope, he was from Latin America, right? Or was that the guy before him?
Yeah, and he's a globalist. He is entirely on board with the whole collectivist frame of reference, and he's he's a globalist. What can you say?
Well, apparently he's also a Marxist too, right? So because
Yeah.
I've heard him talk about the poor need more money for welfare and that everyone should be taxed more to pay for all this stuff. And we know he wants like a global wealth tax. He's in favor of Piketty stuff, and also you know the carbon cap and trade. He wants that too.
Yeah.
Yeah. So I mean, yeah, this guy's like one of those like stereotypical like George Soros picked out Manchurian candidates that basically repeats all the talking points that George Soros wants.
And isn't it interesting that you have, the Pope representing the Catholic Church and having such a large political voice compared to other major world religions and whatnot? I mean, how many people at the top of an organization like the Catholic Church hit the speaking circuit, basically using the bully pulpit of their position to try to make arguments as far as where public policy needs to be worldwide? I mean, the guy, he's not just a representative of the Catholic Church, he's also a representative of the globalist, milieu. He's very much part of that, and as a result, he's compromised.
Well, yeah, in this case, they're trying to use religion as a form of control.
That's right. Well, that ain't new for sure. But,
yeah.
This particular pope is very aggressive.
Yeah, I agree. I mean, I respect other people's religions, but if they're going to try to force things on you, then you're getting into dangerous territory. You're getting a very slippery slope there when you try to force other people to convert to certain religions, or you try to force certain beliefs or ideologies about the world or the economy on other people. And finally, the last scumbag, and this guy has been a scumbag before, Jon Corzine, New Jersey governor, former CEO of Goldman Sachs, big donor to the Democratic Party. Obama saved his ass on MF Global. I think Eric Holder did too. So he only paid, $5 million in a civil suit?
That's
well,
right.
Now Jon Corzine...
That's right.
Yep. Yeah, this guy's a huge scumbag. So Jon Corzine, he never served a day in prison for the MF Global mess. And so now Jon Corzine wants to raise capital and start a hedge fund to short these overvalued Donald Trump markets. So do you think people are actually going to give him money, Eric?
Yeah, I mean, he's got a pretty decent network, and he'll be able to raise funds. And this isn't his first rodeo. That's why he's a scumbag, is he's perpetually able to do what he does. Great example of the pervasive corruption within our financial system and political system and how they interrelate.
Obama can easily write him a check now because Obama's making tons and tons of money for each speech and the large book deal that him and Michelle Obama have. The Clintons can easily write him a check, so they're not going broke anytime soon. They can give him a check. So he should be able, just working his political contacts of lazy parasite political people that haven't made a product or service and have still gotten rich, he should be able to get checks from them for his hedge fund. Yeah. And I don't think he would steal from Obama or the Clintons because he'd probably be worried about being taken out then.
Well, the investment thesis of long in the tooth U.S. equities market is not exactly a controversial thesis, so he'll be able to raise funds for that pretty easily.
Well, I was just bringing up the point, though, that, there's a reason why Bernie Madoff surrendered and went to jail, and he had stolen from people that, no matter where you are in the globe, you can't hide.
Yeah, and Madoff, pissed off the British royal family. He was going after individuals that mattered, not, small-time players.
Well, in addition to that, Madoff was also taking money from, from drug cartels. He was taking money from the Russian mafia.
Yeah.
He was taking, money from people that if you lose their money, you're in a lot of trouble.
Yeah.
So I don't think Corzine will necessarily... Well, he may take political elites' money, but I don't think he'll take that other money. But yeah, Corzine should be in prison the rest of his life, too. Enormous scumbag. Not quite as bad as George Soros, but, he still has a couple decades left in him. So.
Great.
He still has a couple days,
We'll
decades
have a lot of
left.
material to work with in the years ahead.
Well, George Soros is in the Scumbag Hall of Fame, as you guys know. So, but that doesn't mean John Corzine is he's dating women half his age and running around on the beach. So he's still got some energy left.
Yeah, he's a contender. He'll catch up to Soros, maybe.
He's got some time to add to his resume. That was my point.
Right.
Obama too, man. Now Obama's got all this money and he's going around being, flying around in private jets and private boats, talking about climate change. Huge hypocrite as well.
And here we were hoping that he would just retire to 300 rounds of golf every year.
No way, man. He's back here in D.C. too, wreaking havoc. I actually, Jack Posobiec has some good sources here in D.C., and he actually said that there's a lot of people from the FBI who are loyal to Comey, who were immediately, as soon as Comey was fired, were transmitting evidence and taking it over to Obama's house. I kid you not. I actually saw that on a tweet, man. Welcome to dystopia, right?
Yeah. Well, Obama was setting up a counter coup, basically.
Well, yeah. Well, if they have certain evidence, they can probably take it to they can craft some type of message and take it to the media and sell it, just like how Hillary Clinton and John Podesta, right? 24 hours after she lost the election, they went all in on the Trump-Russia connections, right? To try to discredit Trump, and so he would get impeached.
Yeah.
And we know that was manufactured because not only was it in the WikiLeaks, in the Podesta emails, but there's also that new Hillary Clinton book out. And, Democrats are talking shit on that new Hillary Clinton book out. But it was, have you heard about the authors? The authors, Eric, were actually hardcore Hillary Clinton supporters, and they were disappointed to see all the stuff behind the curtain, how the sausage was made in her campaign.
Yeah.
Yeah, so they were doing the book, like documenting how they thought she would win, and then, that's not how the election turned out and the book turned out. They saw all the corruption and all the stupidity, and, we found out they had the sources in the book that the Trump-Russia narrative was hardcore crafted and sold to the press within 24 hours of her loss. And yet, now it's really crazy, Eric. Last point before we shut down the show. Really crazy how, if you're a Democrat and you start telling the truth, right, then the party starts to turn on you. It's a very interesting because obviously, those book authors were like, oh, we love Hillary. We're going to document her winning the election and breaking the glass ceiling and being the first woman president. But then they start to tell the truth, and then, all their friends and the other people start to turn on them.
Yeah.
Very interesting. Well, this is a fucked up society we live in now, right? Where if you tell the truth, now, there's huge consequences.
Hey man, you gotta curtail your swearing because YouTube is gonna use their AI to spot those F-bombs. I think I may have screwed up our last show because I dropped one.
No,
they demonetized
they're not.
It was probably the discussion about Syria, not any swearing or whatnot, but they use that as an excuse to go after us too. So I got to get a bar of soap, folks. Jason's out of control.
They're not going to demonetize this video because of a couple cuss words. It's going to be because of the title. If we pick a controversial title, that's we'll figure out an interesting title. But if the title is too controversial, they'll just demonetize it based on that.
Well, special media producers like us that have a wonderful following amongst the leaders and managers of censorship at YouTube do in fact bird dog particular publishers to have special treatment with the AI programs that YouTube has to be able to scan through automatically whether or not people drop F-bombs. So whether or not that happened, who knows? But they do have the technology to be able to do that.
Yeah, you're right about that. I think I only cursed once or twice in this show. But anyways, I want to thank everyone for listening to this episode. This was Welcome to Dystopia, episode number 35. Everyone have a great weekend. The weather is in the United States on the East Coast is finally starting to get warm again. So I'm going to enjoy the rest of my weekend having fun outside. Okay, bye. Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.